In this particular video, I'm going to be doing a weekly chart review, specifically for Forex pairs. I'll do the Nasdaq as far as indices is concerned, and maybe a couple of stocks near the end, just to give some insight as to where potential prices may be headed. Okay, so let's just dive in. First thing we want to take a look at before we go into all the currency pairs is this in particular. A colleague of mine does this up. Her name is Amber, and she does a great job of kind of giving the overall sentiment of every currency pair, major and minor, that we need to kind of be aware of. Okay, so as you can see, there's some green arrows, some red arrows, and then this kind of black dash. What that indicates is it's neutral, it's not bullish or bearish. Okay. Interest rates, when they get raised in a particular country, it makes that currency strong. I know it seems a little counterintuitive, because when interest rates go up, we assume that inflation occurs, and that's going to cost us more money in order to be able to purchase anything. But for the actual currency, that's a good thing. Yeah. So for example, if USD raises their interest rates and the Australian dollar does not, what's going to happen is that specific currency pair, which appears as AUD USD, will be bearish, right? The way that you need to understand that it works is whatever currency pair is in the front and it's moving up, right? That indicates that that currency is strong. If this chart would be moving downwards, that means the USD would be strong, right? The United States dollar. So if we are seeing this currency pair as bearish, that means USD is strong, AUD is weak. If we're seeing it as bullish, AUD is strong, USD is weak, right? That goes with every single currency pair that you're going to see, right? So Euro, AUD, same idea. If you see Euro moving upwards, Euro AUD going upwards on the chart, that means the Euro is strong, AUD is weak. But here we clearly see the opposite, right? AUD has been kicking Euro's butt for the last several weeks, and it's kind of painful to watch, actually. All right, so let's just dive right in. We're going to start with Aud Cad, and I'm just going to go in alphabetical order all the way down. I might jump into Bitcoin and Ethereum just for fun, but we'll see how much time allows. So for Aud Cad, what I like to do is I typically want to find the overall support and resistance zones. And what we can see here is that this is on the daily and all the way back from May 2021. And this is when we finally crossed that zone after having it be a zone of support, right? Then it broke through, and now it's a zone of resistance. So this has been going slightly down the entire time, showing us that it's bearish. However, now we finally made a higher high compared to the lower high that we've had, right? So now this could potentially turn all the way around and start moving towards the upward trajectory. Okay, so in order for us to understand where this is trending right now, since it was overall bearish and now we've hit our lowest point, but now we've hit a higher high than our previous high, this is now on a short-term bull run. Okay, so I'm going to switch it back to the 4-hour to see where everything is looking here. I'm just going to do a deeper dive in on this one, and the rest of them I'm just going to quickly tell my sentiment and where I'm expecting it to go, just for the sake of time. Right, so we've hit our low here, our high here. I just do a very straightforward Fibonacci retracement. So grab the tool right here, grab it from the lowest point including the wick to the highest point including the wick, and there we go. We get our retracement values. Right now it seems that it pulled back to the 50% and it started going back up. So what that tells me is that that's not a very deep retracement, which shows that this is very strong in its bull run. Okay, usually if you get a deeper retracement down to a 618 or the 786, it shows that there is some pushback from the other currency, but overall it is still trending that particular direction. It's just not going to be trending as strong. But as you see this one, every little move we had a slight pullback, goes back up, slight pullback, but it never really pulled back deep enough to concern us that this run might be over. Like for example, if we go from this low to this high here, we see it went down to the 618 but started going higher. So it wasn't even that as deep as we would like it to be if it was going to be something that retraces all the way down for us to be able to snag higher. All right. 618s are typically very good indications that this is still a continuation, although it might hover around that area. So sure enough, as you see, when we draw that chart back here, right, over that 618, you can see that the candles, that's where they're likely to hang out for quite a bit of time, right? If it's the 50%, it's very quick, right? It kind of just pops into it, maybe hangs out for a few hours, maybe a day, and pops right back up, right? When we're looking at a deeper retracement like the 786, that could last a little longer, or it could be extremely quick, right? It's very volatile, I would say, when it gets that deep on the retracement. But overall, again, I'm expecting this to go up. If I'd be bullish on this, I would be kind of concerned if it would break through this. We're definitely going to be seeing some resistance at this line there. I don't know if we're going to be seeing it go any higher. If we do, then we're going to go into a little bit of uncharted territory, and we're going to have to get creative with Fibonacci retracements, right? So we'll do that up on a currency pair that is a little bit more valid to use on right now. But again, potentially from where it closed on Friday to where it can go, it's another 117, 118-ish pips for it to continue its run. Possibly, it could very well just kind of bounce off this orange line, because that's where we've had volume, right? So that's another thing I'll be talking about, is fixed ranged volume profile, right? If we draw it in that consolidation zone, you're going to notice that well, it's a little lower there. I think I drew it up until here prior. Let's see. Oh no, it's a little bit lower. So whatever the case is, if we do the fixed range volume profile from here to here, it's going to give us a peak that the majority of the volume was there. I think I drew it up because I had it going just from the top to the bottom here, and it was that little space. But overall, this is where our volume is at. As you can see, one wick kind of tested that already. This is going to be kind of the contention zone. If it breaks through that, this is our next resistance area. If it breaks through that, then new territory to watch out for. But this is what we're looking for. If it resists off this, then we're going to be going in a nice deep run back down, right? Aud Cad, if the Canadian dollar's interest rates are raised in April, we're definitely going to be seeing a run to the downside, right? Australia is not going to be raising their rates from what they said for the next 2 quarters until their inflation rate stabilizes. So that's kind of where we're sitting at. AUD Chf, a little bit. I was hopeful with this run here back in January, and I was hoping for a retracement to get back to that area, but we've just kind of see it slowly climb. Overall from that entry point, it was 453 pips over the course of a month and a half. Not too shabby, right? Now what we're looking for, and I'll switch it down to the 1 hour, is right here. Is where I call institutional candle, right? We hit our peak. What that means as far as an institutional goes is when you have a very sharp move in one direction followed by a sharp move in the opposite direction, right? And candle sizes are at least up to the halfway point, if not equal or greater. All right, so you can see this green candle right here, and I personally like to do wick from wick to wick. Some people prefer just the candle body itself, but I like all the information, not just where the open and the close was. Okay, so you draw the 50% on that final candle moving in the upward direction if the next candle was down, right? So here, and then we had a volume profile from way back. That was a supply and demand zone that was further back in the past, and that's exactly what we've crossed, right? So I'm predicting that we're going to hit around that 50% for a slow trickle down, right? CHF, as you saw, was remaining neutral, and AUD, if we take a look at it again, it is going to be bearish, right? So neutral versus bearish, I would say we're going to be looking at a slow trickle downwards. First things first, if we get a little retracement back to this area, that would be a very good spot to look for a sell. Okay, now I just want to clarify, I am not a financial advisor. This is not financial advice. This is just my opinion and some trade ideas that I may potentially take, or throwing them out there, you know, just to see if it moves in the way that I'm thinking. That's all. Okay, so that is what I expect from AUD CHF. AUD JPY, this is just going to continue upwards. JPY is incredibly weak. The yen, Japanese yen, this has been on a bull run for months, so I don't expect it to slow down anytime soon. You know, as you can see, it made a retracement down, but it's just been climbing. Yeah, so it's unfortunate. Like, I would have loved to get in a little bit sooner, but there's been a lot happening over the last 2 weeks, and I've kind of not been on my charts as much as I'd like to. So whatever, missed out, that's fine. There's always going to be runs to catch here and there, but this was quite the nice one to jump in on, especially since we know JPY is very weak. Alright, AUD Nzd. I made myself a little note here. Both currencies are at equal strength. Equal strength or equal weakness, however you want to see it. But I believe we're going to be bouncing in between these two zones. As you've seen, there's some liquidity up here has been tested already. So I would say for me to get a good entry in there would be once we reach this zone, I'll set a pretty tight stop loss and kind of aim for the ride down, right? At least to here, right, before we can take it further down, but at least it's a nice goal to aim for. AUD USD, as we've seen, USD is going to be much stronger in the upcoming months, right? But right now AUD is still kind of on its final run. Okay, so what I'm expecting is AUD to kind of hit this zone because we formed an imbalance way back here on November 2nd, and it hasn't been filled yet. So what an imbalance is any time where we have a sharp move in any direction and there hasn't been any kind of wicks before it or after it to kind of how do I want to put it, to confirm or solidify or whatever that particular move itself. Okay, so for example, you know, the wicks here, it's right there on the candle body of the previous wick and the current wick and the current candle. Right, but if we switch it over to the 1 hour, we can see that let's move it all the way over. We can see that there is an actual gap, right? Right, there is no wick before or after that particular candle that would indicate that it would be kind of like a closed gap. Okay, that's how I would consider gaps on Forex. It doesn't work the same way as NASDAQ or stocks. Okay, so as we see, that hasn't been filled. It's just been trickling down, forming new lower lows and lower highs. Okay, until we finally got to our lowest point before running upwards again. So what I'm expecting out of this one, right, is once we finish our bull run with AUD, I would expect it within this week, you know, maybe the next 2 or 3 days, we'll hit that zone, and then we're going to have a nice rejection all the way back down to here, because that's another imbalance that hasn't been filled, right? So a potential of, let's just draw this guy right here. Let's say for giggles, let's put the stop loss right here at the white, maybe 36 pips for that. You know, a potential run of 457 pips. You know, I mean, it could be a little overzealous, but if everything lines up the way I predict, then we're looking pretty good. If anything, it'll be one more area of contention where there is an institutional candle in this wick right there on the 1 hour time frame. Right, as you can see, sharp move down followed by a sharp move in the opposite direction indicates a strong institutional play. right? So if anything, maybe our bull run or our bear run will be down to there for 356. Realistically speaking, once it hits that area and you see it kind of sharply bounce up, you know, I would personally close. You know, you can risk it probably coming back halfway and maybe going further down, but you know what? I personally like to secure my pips rather than hoping it's going to go a little bit deeper. There's no sense of being greedy. Just get out with what you already know is a solid run. You know, but yeah, anyway, that's my prediction for this currency pair. It looks pretty solid. We'll see if it happens. I'm excited. All right, CAD CHF. Not much really to get into on here. You know, I'm not a huge fan of CHF pairs. I do predict that this is going to go down overall. It's been bouncing in between this support and resistance zone since February of 2021. So it's quite a good prediction for it to kind of stay within that area. So if it gets, you know, either to this blue line, just a side note, I like doing fib channels. It gives me trend lines and Fibonacci all in one. Right, I'm going to explain them in another video on how to trade in a how to trading view video. But for chart review for the time being, I'm just going to, you know, tell you that I use it and hopefully you'll understand. If not, then just follow along to the best of your ability. Okay? So resistance was formed up here. But this has been trending to go slightly lower. So if it bounces off this area, it's a good chance to you know, formulate your entry somewhere around there and have your stop loss be around resistance. You know, it seems a little bit large, you know, 65, 66 pips if you really want to snipe the market, because then in order to get your 2-to-1, right, minimum 2-to-1, you would have to gain 137 pips. Entirely possible. You know, and if it goes all the way back down to the other support zone that we're looking at, it's a 5.76 to 1 ratio, which is very good. But you'd be looking at a much longer play. Like, we're on the daily time frame here, right? So that could take a few months to fill. And realistically, we want to make sure we grab something that's a little bit more well worth it at that point, right? Like you could see here, it kind of hovered around that line for 4 weeks. Right, it was from, let's see, it hit the line here February 20th and finally left the line on March 8th, right? So that's 3 weeks of just kind of hovering on that same area. So yeah, that's why I'm not a huge fan of CHFs. They're very a strong neutral, if you will. CAD Jpy. This one I did something a little bit different. I did a Fibonacci retracement. Only because this is going to continue climbing. Jpy is very weak, and Fibonacci retracement kind of lets me know what area could have a potential reversal. And not to say that it's going to reverse all the way, it might just reverse, you know, back down to that 618 before climbing again. Now, a Fibonacci retracement, usually after between the 1 and the 1.618, that's the area I'm looking for it to reverse. If we break through it, then this invalidates that analogy, right? Like, we don't want to aim to get a retracement when it's already past that red zone that we see here. Right? We'd be looking for a reversal somewhere here, and the best thing with this strategy is you would incorporate your EMAs. Right, so we would do it on anywhere on the 1 hour or the 4 hour. I personally like to do a 1 hour just to get tighter entries in. But if we cross into this red zone and then our EMAs cross, right, so the yellow crosses the red, that would indicate a pretty strong entry for a sell. And then especially if it crosses my pink or my white. I like using Fibonacci numbers, as you notice, Fibonacci EMA ribbon, right? So the yellow is a 5, the red's a 13, the pink is a 55, and my white, I believe, is, don't quote me, 233. I don't really need to use deeper levels when it just comes to the EMAs. Just personal preference. Now you're going to see people that use an EMA of 50 and 200. Now I don't know what those arbitrary numbers stand for. You know, you could literally just pull numbers out of a hat and you could get a 50 and a 200. Like, it's an arbitrary number, it means nothing. So, you know, I really don't understand why there's a lot of traders that think that they're valid numbers to use, right? Or the 1000. Why use 1000? Why not use a proper Fibonacci number that occurs everywhere, in nature, in money, in, I don't know, anywhere in life, in math? It's an incredibly powerful tool to use at your disposal, right? But enough of my rant. I would just strongly encourage you to learn Fibonacci and apply it in every possible way. As soon as I started doing it, I've seen massive growth and success in my calls. I've had a loss rate right now of about 20%, and I think that's pretty decent. You know, could have been a lot worse. When I was starting off, I was lucky to get 40% right. Now I'm, very confident to assume that I'm going to be getting at least 70% of the time correct, if not more. Right? If I'm over 90, that's incredible. Like, that is fantastic. But I find more success with trading equities, but we'll get into that later. So yeah, overall, we're aiming for a reversal somewhere in the red zone, and that's where we'll jump in for an entry on a sell. CHF, JPY, I mean, like I said before, CHF pairs are strongly neutral, but JPY is very weak, so this kind of blew upwards. Let's see, Euro AUD. Wow. If only we were able to catch this drop from the top. That is 1,655 pips from top to bottom in a span of a month, right? Like, it started February 4th and it finished March 6th. 29 days, right? 29 days, almost just a little over 4 weeks. 1,600 pips, like, that's insane. Some people can go months without seeing that kind of number, right? And that's good traders too. But 1,600 pips on a Forex pair, that's crazy. So you know what we're going to try to do? We're going to try to catch that run towards the upside. Now, Euro has been very weak. Like it says right here, right? There's going to be no increase until maybe June, because the Euro also wants to see kind of inflation level off before they increase rates. So this could be, Euro could be a potential dud for the next few months. If the Aussie dollar and the Euro are both weak, they might just kind of go sideways. If not, then they will play out as, we predicted. It's typically when one currency is stronger than another in the pair that we're going to see rapid movement in one particular direction. But if we have sentiment that is weak in both currencies, we just might see slow movement in either direction, right? Something like this, for example, where you see, it starts low, kind of goes up, a little bit down, but it doesn't go lower than the previous low, then it goes higher, slightly higher than its previous high, then back down. Like, it does that sort of trickle effect, okay? What we'd be wanting, or something like this, right? Where you see if one currency pair is, if they're both about equal, you're going to see the slow kind of movement in one direction like that, rather than, sharp moves like this, okay? So right now, if we're looking at it through here, let's just do a normal Fibonacci, and we'll go from this low to this high right here. And as you can see, we've already crossed the 50%, and let's see right now if it bounces off the 618 and goes up, or it goes a little bit deeper. All right, so what I would like to do is catch this on a reversal and get it all the way up. My target would be this aqua line right here, because that indicates where I drew my Fibonacci trend off of, the Fibonacci channel. Okay, let's see if it happens. It's going to be within this zone right here, where we're going to see the play that we're looking for, right? Especially if we have an EMA switch. Okay, now Eurocad, just bear with me for a second. Eurocad. Same idea as Euro AUD. We're probably going to be seeing a little bit more retracement towards the upside. However, the Canadian dollar is going to be much stronger than the Aussie dollar. So I have a feeling we're going to get a little bit of a retracement, but then we're going to be going much lower. All right, we're gonna let's see. I will be looking for an entry somewhere around this aqua for a sell. The reason being is I don't really see it pulling up that much higher, because that would mean the euro will need to be extremely strong in order to be able to reach that height. You know, I'm gonna aim for a retracement off the aqua here before going lower. I don't even know if I'm gonna hit that, to be honest with you. Let's see. Let's see on the 1 hour what this looks like. Alright, so a good institutional play would be right off this, but I think it already played out based off this retracement there. Now again, I like to go wick to wick, alright, and a typical, the perfect pullback would be if the candles would go up to that 50% mark and then drop right back down. But this kind of entered the zone and rejected even before hitting that 50%, so we could be seeing very strong bearish sentiment on this currency pair itself. Alright, Euro CHF. There's just an imbalance that formed up here on one of the candles on the 1 hour. All that tells me is that it's still going to be heading down, but it could just quickly pop up and close that imbalance before going lower. So, you know, nice potential entry to take from that area. You know, I would probably go somewhere in the middle there, and maybe, you know, even right to that yellow. 35 pip stop loss is still very reasonable. And I would be expecting a run at least to that support zone. If that seems a little bit extraordinary, you know, we may not be going that deep, but I believe we would be. Right, so let's say best case scenario, we snag 390 pips. That's 11 to 1 risk to reward ratio. Pardon me for saying we a lot. I'm used to doing these calls with a couple colleagues of mine, and we like to get in on the pairs together. So yeah, I need to start saying I, because now I'm doing these videos solo for now. Anyway, that's my potential entry right there. Euro GBP. Not really much excitement going on here. We do know the great British pound will be more bullish, right? As we see right here, banks did not raise their rates on February 3rd, but they did actually raise it higher in March. So what that tells me is that GBP will be going down, right? So what we're going to be seeing, if we do a Fibonacci, let's just do a normal one, okay? From the high to the low, right? We've had a very deep retracement past the 886 right here before reversing, right? So I would say as long as we have our EMA ribbons that switch nicely, right? So let's take a look what we have here. So on the 1 hour, the yellow has crossed the red, and that's a very good sign, right? If they end up crossing that pink, that 55, that's going to tell me that we're in a definitely strong sell mode, right? And because the white and the pink are almost on top of each other here, like they're distance of 13 pips, 14 pips, something like that, right? Now you can imagine the lower that it closes, the pink is going to go down. So once this yellow and red crosses those two, that's a very strong indicator for a sell. Now, just to give you an example, look what happened when the yellow and the red crossed here and then crossed the pink, shot right up, okay? So very likely scenario happening here going down. Euro, and I'm gonna turn that off for a second, okay. Euro JPY, same sort of idea. We know that JPY is probably the weakest currency pair, the yen. However, Euro isn't really holding its ground right now. So, if they're two weak pairs, I'm just going to go based off market structure. And we had a nice institutional candle right there. So I'm aiming for that 50% retracement, or sorry, not retracement, but 50% of that candle to climb back up to. That's where I drew this nice thick blue line. I'm expecting a bounce off that and going back down. It's going to be a very sweet entry, and that's what I like to call a snipe. you know, let's see if it plays out. I'm excited. We'll check back next week on this currency pair, and I'll leave it on this chart to see if that actually happened. And if it broke through, then, you know, no harm, no foul. It's not an entry I'm going to take right off that tip. You know, it'd be something that if I were to take it, it would be set with a very, very tight stop loss, right? So it would be with, in this case, I mean, tight would be 45 pips, right? That's not as tight as I'd like to get it, but you know, to gain a potential, where are we on our support? To gain a potential 836 pips, I mean, that's a 1 to 18 risk to reward ratio. You know, I mean, pretty decent, although this run would take over a month to complete. So patience pays off. All right, let's see if that actually works. I'm going to leave it right there. Euro Nzd, I didn't really mark this one up. I'm not a huge fan of Nzd pairs, but as you can see, it plays very similarly to Euro AUD, right? If we look at the market structure, it is almost identical, right? Whatever happens with Nzd typically happens with AUD. That's why, you know, if you do AUD Nzd, this just kind of goes sideways with giant wicks. It's not something fun for me to play with. However, if you can snipe it right in those zones that you can identify, by all means. It'll just take a while. So yeah, Euro USD. Bullish overall, just because of the rates being raised, in the short term anyway, right? In the long term, this has been very bearish. But right now, just because of what's happened in the last week or so, as far as banks talking, sorry, not banks, but the national banks talking about raising rates and Euro not raising anything, very strong chance that this is going to be going higher. And now, just for the sake of learning Fibonacci's, watch this. All right, we go from wick to wick. Look at that, 618 kind of hovers there, goes up. Wonderful. Okay, so that's that. So now that's our newer low and our newer high. Wick to wick. We're at that 50%, coming close. You know, if we bounce off the 618 and go back up, hey, you know what? I mean, doing runs within runs is kind of how you find very good entries to take in the market while it's already moving in that specific direction. All right. So if we come down to this area, you know, right here, nice strong chance to take a move upwards and possibly risking maybe 34, 35 pips, something like that, in order for it to climb higher, because this will go higher. It just may not happen right away. So yeah, that's my prediction for this pair. It could possibly run, let's grab it right in the middle there, right? Let's move our stop loss, maybe, like I said, 35 pips. Fantastic, something like that. Okay. And the potential run, I would do it where the most recent high is. Like, I don't like going higher than that, just because we don't know what's going to happen in, you know, a couple of weeks. Lots can change. But at the same time, when it hits this target and does a little bit of a pullback, I'll probably just take partials. Maybe we'll see where the rest of it runs. Okay, so there we go. That's my prediction for Euro USD. A nice 1 to 15 risk to reward ratio. Gbp AUD. This is just, it's painful to watch these AUD pairs, right? Especially if you're in them on the wrong direction. Yeah. I know of one person, I'm really sorry for her luck, but you know, we're trying to make sure that we snag some wins on the climb and on other currency pairs. So we'll make it work and we'll make sure we come out on top. But I predict that this is going to go up because we know AUD is weak, GBP is going to be strong, and we've seen that we've hit this support line 1, 2, 3, 4, 5, 6, 7 times. And there's a big imbalance right there. So you know what? Why not risk that too? That's the name of the game. Just mitigate your risks so that you're not blowing your bank account, right? But this one could seriously be sniped, right? What's the lowest wick that it dropped to, that white line? I would say maybe 47 or 48 pips. What's the potential? This is where all the volume is. 1124 pips, right? If you want to get it all the way to that that resistance line, 1373. That's a 1 to 28.68 risk to reward. That's a little bit nutty. You know, that's going to be really nice to see if that actually happens. But this would be probably a month or two that it would take to reach that kind of gain. Just going to leave it up there and see what happens. Maybe right there. All right. Gbp Cad. Both are going to be strong for the short term. I do expect a small move upwards, but I don't think we're going to retrace as deep as this. So, you know, potential buy. As far as entry, I don't really know where to jump in on this one. It'll have to be where the EMAs cross. That would probably be the safest bet. So we'll wait for that on this currency pair. Okay. Gbp Chf. Just an imbalance to fill. There's really nothing else I saw besides support and resistance zones. You know, feel free to do what you want with that. Gbp Jpy. We are kind of in a previous supply and demand zone right here and here. We are going to be hitting a resistance zone very soon. But yeah, the yen is weak. We could blow right through it. Gbp Ncd. Similar idea to the Gbp Aud that we've seen, right? Like I said before, the Nzd and the Aud kind of follow each other. They're very similar, right? Same sort of idea here though. We've hit resistance points right there. You know, if we grab this one, it's going to be a little bit insane. I don't know if I'd be able to grab all 1600 pips, but that would be pretty wild. Let's go something a little bit more realistic back to its resistance zone, 1475, 1 to 36.8 risk to reward. Now, I mean, that would be overall incredible to grab that many pips off one pair. Just to give you an example, if you risk 2% of your account, you'd stand to gain 73% of your entire account with this trade. It's not too bad, right? If you just have one pair and you ride it out for 2 months. Now, not to say that that is going to happen. It's just, you know, I like to think that one of those magical days will eventually happen. So, you know, it could be the trade of the year. But we'll see, right? We'll see. It's already kind of bounced off that line. It's already slightly in profit. We'll see where it goes. Gbp USD, both are strong. I have a feeling it's going to be a bit of a slow climb and some hovering around these Fibonacci channel lines. All right, NZDs, I'm really not a fan of trading any NZD pairs. I do draw them up though. You know, overall NZD is very strong in the short term. USD is becoming strong now, so I don't think we're going to be making newer highs with the USD or the CAD pair. But JPY for sure, it's still going to be climbing. Yeah, USD CAD, they're both going to be strong. So right now we're at a support zone. Yeah, we're at a support zone and has been slowly climbing upwards. So quite possible that it will reverse, but it will take a while for it to get back to those zones. I have a feeling we're going to just be bouncing up and down in between these lines. USD CHF, again, it's going to pull back a little bit deeper before going higher, as we can see here. For example, if we just draw a normal fib from the low to the high, you know, we get a retracement almost coming down at the 786, definitely in that golden zone of trades, right? And then if we go to that newer low, which will be, you know, either wick to that high, if we're expecting something similar, we're going to be looking for jumping in on a trade somewhere around this area, okay? And look at that, right? Already here, I can tell you that there's an imbalance to fill, right? Wicks haven't touched in that particular area. It's definitely going to be coming back to that zone. So very nice time to be looking for a buy. USD JPY, I mean, this thing's just going to shoot to the moon, so I don't know where to jump in. I mean, if there would be a 618 retracement to jump in on, that'd be great. I can't see that happening in the short term. Silver and gold, I don't really like to trade. I'm going to leave those out. XTI USD is oil. With my personal broker, I cannot trade this specific US oil, but I can trade XTI USD. So if you take a look, it is the exact same thing, right? The exact same thing. So I'm not really concerned which pair goes. They just have different prices to them. But anyway, XTI USD. We'll just go on here because that's what I have been trading, and it's been a very interesting 3 weeks, especially just because Russia, declared war with Ukraine, and everybody wants to boycott Russian oil while still using it. So there's that for you. But once that's happened, this is all the nuttery that's been taking place. Okay, so I talk about gaps and gaps that need filling. So oil is one of those that does form gaps, and oh my god, is it easy to spot because they will need to be filled at one point. All right, it doesn't mean that they're going to be filled right away, but they will be filled. Okay, look at this one. Imagine knowing that it's going to come back down to this area, right, once it hit its peak. And by it hitting its peak, I mean you'd see that over the course of hours it would just be dropping non-stop. Right? I would probably just jump. By saying probably, I mean I did several times. I jumped in while it was dropping and I made bank. It was a nice couple times to grab those trades. It was wonderful. Oil prices have been just bananas because, believe it or not, like I'll switch over to the US oil because XTI doesn't go back that far. But watch this. I switch over to the weekly, okay? And we'll just get rid of this channel. You don't need to see that right now. It's just gonna be a mess. Okay, look where we've hit right here, our nice current high, right? The highest point before we start dropping. Let me show you something. Okay, oil, pretty steady for a very long time. See, 1990s, like it hit a peak at what was it, $30-40 a barrel, and then it basically did nothing for 10 years, right? Until it got back close to that zone. Then it finally hit the $40 after 13 years, right? 2003. What was the significance in 2003? Not really a whole lot, but oil slowly starts to go up, right? Like our biggest significance was right here, September 11th, right? September 11th is when, I'm sure I don't need to go over a history lesson with a lot of people, but September 17th, right, where was September 11th? Look at that. There's a week gap in between this, okay? That doesn't typically happen, but there was a gap because, again, there wasn't, or not a gap, sorry, I'm on the weekly, my mistake. But there was a gap right here, okay? A gap that needs to be filled, and it will be filled, right, as it was about half a year later. But then it just kept climbing, right? Slowly, week over week, we were seeing higher highs until the point of this massive spike right here, where oil hit $1.47 a barrel. Okay. Now, that was at the peak. We knew that was when the housing market kind of crashed, right? So if the housing market's crashing, why is oil skyrocketing all of a sudden? Right, that means it went from $99 a barrel to $147 a barrel in 6 months, right? That is a 50% increase. And then not even 6 months later did it drop lower than where it formed that peak. And by lower, I mean significantly lower, right? That's when there was a lot of bailouts, and look at that. In this area, that's where prices finally got dropped back down to reasonable levels, and then Obama took office. As soon as Obama took office, slowly oil prices were rising. And they rose, and they hovered in this zone. Right? Until, elections were coming again, and Obama was out. And these are the Trump years, right? Oil is a reasonable price, still affordable. Now Trump's out at about, where was it? Here, November. Biden is going to be elected. Look what's happening with the prices. Like we didn't even, nothing was actually happening in November except for elections, right? There wasn't any conspiracies with Russia and Ukraine or any wars that are potentially going to be happening. But it looks like investors knew what's going to be happening based on what which administration is in. So as you see here, starts going up, does a little bit of retracement, back up, a little bit of retracement, and then just skyrockets, right? You want to say that it's the fault of Russia going to war with Ukraine? So what's the excuse from November of 2020? Why would prices go from, $42 a barrel to $84 a barrel? That's double in the span of 1 year. And nothing's happening in the world. Right? I'll let you stew on that one. That might be fun for you to revisit later on. But ultimately, it doesn't matter who is in office, right? Look at, for example, Chevron, right? Warren Buffett invested in Chevron a month after the inauguration. Now, seems a little bit interesting that, one of the greatest investing minds of our time would jump in on a stock that has existed already for a long time. What would benefit Warren Buffett from jumping in on oil right after a Democratic president gets elected? You push green policies, you try to put a war on oil, but then when people suddenly need oil, it's being sold at a premium. Mr. Buffett probably recognized this and knew he'd jump in, regardless of, the pros and cons of the particular portfolio itself. Once you know that a commodity is going to skyrocket at a certain point in time, just simply based on policies, you stand to make a lot of money. And, finishing off with this, let's jump in on stocks, right? Let's take a look at Chevron on the daily. All right. When did Warren Buffett invest? February of 2022, I believe. No, February 2021. That's right. Okay. So zoom out a little bit. February of 2021, Mr. Buffett, you invested in Chevron after a poor earnings report. Very interesting, right? Look at that. Poor earnings report, decent earnings report, right? Poor earnings report. Anyway, so Mr. Buffett got in February, I want to say around here, February 11th or February 20th, somewhere around here anyway. Okay, for a good part of a year, nothing's really happening, right? 2021, yes, 2021. And then, oh look, price has gone up for where it's currently closed right now, $66 a share. $66 a share. Now, if we're doing percentages, that is approximately, what would you guys say, a 70% increase in the stock's value? It's almost guaranteed. Now look, poor earnings report, right? Well, not poor, I mean it's a little worse than expected, but it's still very good, right? But look, this just shot right up. February 24th, February 22nd, right up it goes, right? Within the span of 1 month, this stock went up $39, almost $40. Just saying, if you know what's going to happen based on policies and who you elect, it's very easy to play the stock market, right? Now, what we see here is a gap that formed on Chevron. So I will zoom in a little bit on the 1 hour time frame. Now you see there's two gaps that need to be filled. There is one right here, right? And there is one right here. Oops, let me click on that one more time. And there is one right there. So what that tells me is where current price is right now at the close of $160. It needs to close this gap, so it will come back up to 170 at some point. I'm not saying it's going to happen next week. I'm just saying it will happen. Okay, that gap needs to close before it does any more strong volatile moves. So if you want to jump in for a quick 10 bucks, by all means. However, one thing that I like to do now is kind of project where NASDAQ is going to be going, simply from doing 543 open and close back tests. You know, so I have the data compiled and I did my research based on this, and after I finished it off, I did a couple days of testing and I was right every single day, so I made some pips off of the indices. It was very nice. I can explain in another video, but I'm just going to move on to the actual stocks, the ones that I highlighted. So Amgen has one particular gap to fill right here. Okay, so that means it will be dropping because it just kind of shot up for no particular reason. There was no earnings, there was no news, there was nothing really going on, right? It just kind of shot up, and now that gap needs to be filled. So at one point in time, this is going to be dropping. Now, the higher that it goes, you know, once it hits its peak and it starts reversing, it's going to be a very sweet time to jump in on this. But I have a feeling it's going to happen sooner rather than later. Okay, this one is the only one I'm having a few concerns about because Activision had very strange moves over the last few weeks. Okay, I'll switch this to the 4-hour just so it's not so tight. But Activision jumped from $65 a share and opened the next trading day at $86 a share and slowly trickling down from there. You know, this caused a very large gap. You know, I mean, from where it's the lowest point now. So we have a $12 gap from its highest point to its lowest point that, you know, there was nothing to trade. But not only that, this gap was also formed here. Right? You can see that. But that gap is a little smaller to fill. So now we have two gigantic gaps right there. What that's telling me is that this stock is going to be going down. It's just a matter of time, right? It had a very strange shot right there. Could have been news that came out on that day. But look, it had, you know, subpar earnings, still kind of hovering around that same price. Kind of goes to show the earnings really just affected for maybe 1 or 2 days, right? Overall, there is a movement that the stock will take, and it's up to you to be able to figure out where to grab it. Okay, let me show you Disney. Disney has a gigantic gap right here. It had mediocre earning report. Okay, now on the same front, it had fantastic earning reports here and here, and it gapped up. But now look at this. Look at this interesting thing. It had a gap right here on its right before its earnings, actually, right? Several days before its earnings. But watch, it gapped up here. And, would you look at that? It just got filled last week. Now it's going to be going back up because that bottom gap is all taken care of. Finally got filled out. That's the lowest point that it was going to go. Wouldn't it be sweet to know when the stocks are going to hit their lows on the pullbacks before going back up? Yeah, it is. Glad I grabbed it myself. All right. Now I'm expecting this giant gap right here to be filled as well on the way up. So that's why I'm bullish on this stock as of beginning of last week, taking it from 128 to potential 173 before we see any more playing. You know, it's a good place to be at. Typically what happens with NASDAQ and a lot of stocks that are traded on the NASDAQ, what I've seen from bearish runs, we have a change from highest to lowest that can go up to about 25 or 26%, right? So if we had a high of, let's say, 10,000, for example, it can drop down to 7,400. If it drops down to 7,400, it goes up by 10 to 12% before pulling back anywhere between 5 to 7%. So good thing for us to know by doing some back tests on large bull runs, right? Or bear runs. Every year and a bit, there's, you know, a couple months of bearish sentiment. right? So what we would be able to tell is that, hey, what's let's say 12% of where we're currently at, right? So if we want to add 12% from the bottom here, let's say, argument's sake, it's going to be about $16, right? So we're going to hit probably about that part at that point, 144, before we have a reversal down to, you know, what I say, 5 to 6%, so down to about 137, and before we retrace back upwards. Okay, that's on Disney specifically. Now let me show you on Disney and Netflix. Okay, Disney had bad earnings and it dropped. These are competing companies. Netflix had good earnings. Well, revenue not so much, but this the earnings report was very good. Now it dropped $100 a share. Interesting. Now there's a gigantic gap to fill. Also interesting. So that's why I'm very bullish on this particular stock too. I grabbed it somewhere around down here, around the 340 range. I expect to ride it up to at least 506. When that gap closes, then we'll see future movements and how they will be handled. All right, but if we want to take a look at the past, right, all these little gaps have been filled as it slowly climbed up, right? So there was nothing pulling it down, which tells me that there was just manipulation trying to get people to panic sell their stocks, and sure enough, they did. You know, they grabbed it all the way there. They got excited. Oh man, all right, now it's going to be going. Oh no, that didn't happen as we thought. That's too bad. But you know what? If you knew when to get in at this point in time, this would be very good for you. I believe that the bottoms of a lot of the Nasdaq stocks was last week around Tuesday. And I'll pop in right here just to show that, right, on my long-term chart. What is it? March 15th, I believe, is when we hit our low, right? That was a previous support line that I've had. We went after hours below that support line, but during market open, we never actually crossed back down through it. So what that showed me is that when the market opened, we were very bullish, and we still are. You know, I expect us to close this gap first before pulling down a little bit. I do not believe we are heading back down to this level. Out of 543, like I mentioned before, back tests from opens and closes, 543 of them, there's only been 9 instances where the gap was not filled. Okay, that's about 1%. 1.2% if we want to get into semantics. Okay, 1.2% of the time, so that's like, what is it, 1 out of every 98 opens and closes, that gap will not be filled. And it's only on a bull run that it's not filled. On a bear run, it's always filled. So yeah, you can take my word for it, you can do your own research, that's completely up to you. I would just say that in this instance, take my word for it. I did the tests, it took a long time. Alright, well, I hope that this has been helpful. And you know what, maybe we'll just jump into one or two stocks. Let's go with, I don't know, Tesla seems like a popular one. Okay, we'll just do Tesla quickly and then I will call it a night. Alright, so let's take a look here where we've had any gaps that needed to be filled. I'll just turn off my EMAs. Okay, we don't need to see that right now. Alright, so look at this for example. Gap created October 22nd. Gap filled December 17th. Sorry, that was a little lower. But anyway, gap filled, right? Another gap here was made. So every time that there's going to be big gaps in between opens and closes, these gaps will have to be filled. And they always are. Look at this one. It was filled from this high, right there, over here. Now, would you call that a fill? I mean, it was $3 difference from top to bottom. I would kind of give it the benefit of the doubt there, but you know what? Tesla is a company I kind of like. They have a lot more going for it than just electric vehicles. So, you know, very likely, pardon me, very likely we'll be seeing those prices again. I don't know how soon, but you know what? Based on hitting its low at $699,700 right here on February 24th, and you know, on March 21st, less than a month, being up $200, seems pretty reasonable. Seems like we're going to be getting there sooner rather than later. Okay, and just to show you what all these gaps look like, let's switch over on the 1 hour time frame, just so we can see opens and closes. Pardon me with that, or maybe 30 minutes, that's better. Okay, look at these. Gap from close to open gets filled. Okay, gap from close to open, because it opened way down here, gets filled within the day, and then some. Right? This it may not seem like it's anything crazy, but you need to understand that gap was gigantic. That was a close to an open of $64 difference, right? That is very significant. So what happened? That exact move right here was, oh, pardon me, let me just get to the proper spot. Nasdaq is a little bit larger than the stocks. There we go. That was right here. Okay, look exactly what happened on the Nas. It closed right here. Okay, and it went down all the way 400 points, 392 points before it opened back up again. So the market opened being under almost 400 points from its previous close. That gap needs to be filled. Sure enough, not only was it filled, but it blew up. All right, this went up on that day 873 points, indicating a very strong reversal. Now, a lot of people will call that a bear trap. Not on the first day, it's not. You know, the bear trap is when you keep testing higher highs, and then eventually it kind of tanks downwards, right? And it gives you kind of false hope where, you know, does a sharp move down, it pulls back halfway through the day and trickles downwards and downwards. Those are what you call bear traps. These sharp moves here, that's a market reversal, right? We tested that zone once more after hours, right? And as you can see, we sharply tested that zone, and then we sharply reversed the next day. Right, so the party's over as far as the bear run's concerned. I could always be wrong. Who knows? Right? Haven't been wrong since, or haven't been wrong yet. But yeah, you know, there's always a first for everything, right? So yeah, just to be aware, as Nasdaq moves, a lot of the higher earning. Sorry, I'm getting tongue-tied here. A lot of the higher earning stocks will follow suit very similarly to how the Nasdaq moves up and down. All right. Oh, PayPal is another good one, right? Look at this massive gap to fill. Holy cow. Getting in on there at $92 a share would have been sweet. Personally, I got in around the 95, 97 mark, but that's fine. You know, I'm happy with that, because I'm expecting this run. Oh look, there's a gap that needs to be filled. That's terrifying. Maybe we're going to be seeing it drop down again. But from 119, you know, I'm expecting it to have to close that gap of about 169. Oh, that's not it actually. It is 174. That's what we're aiming for. All right. Well, that's it for me for tonight, folks. Catch you next week. If you like the content, please like and subscribe so I can continue doing these, and hopefully you guys are able to get something out of it. All right. If there's anything that you want me to take a look at in particular, I'll try to do a dive. If there is any specific indicators that you want me to share and teach, by all means, write it in the comments and I'll do my best to address them. Well, thank you very much. Have a good night. We'll see you next week.